This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Rally on. The blue chips close within a few points of all-time highs as investors cheer the withdrawal of a top candidate to be the next Fed chief.
Busy agenda. A critical Fed meeting starts tomorrow. Just around the corner, the debt ceiling debate and a possible budget stalemate. How should you prepare your portfolio?
And rampage at the Navy Yard. At least 13 are dead in a mass shooting at a federal installation blocks from the Capitol and the White House. This is Nightly Business Report for Monday, September 16th. And good evening, everyone. I'm Tyler Matheson.
And I'm Sue Herrera. I'm in tonight for Susie Garrett. Stocks rallied today on news that former Treasury Secretary Larry Summers dropped out of the race to be the next chairman of the Federal Reserve, saying his confirmation process would likely be acrimonious and it wouldn't serve the interests of the Fed or the economy. We'll talk more about the Summers decision and what's next for the Fed in just a moment. For today, with Summers out of contention, traders believe the Fed's easy money policies will continue in the post-Bernanke era. So the Dow saw another triple-digit gain despite concerns about a horrific shooting at a Navy facility in Washington, D.C. The Dow closing well off the highs of the session, but it still added 118 points. The S&P was up 9, but the Nasdaq ended down 4 points, hurt by shares of Apple, which declined 3% on news that China Telecom was cutting back on subsidies for the iPhone.
Well, even before Lawrence Summers bowed out of the running to lead the Federal Reserve, this was sure to be a week where the Fed moves front and center. Tomorrow, a two-day policy-setting meeting begins, one of the most eagerly anticipated in years, as the central bank weighs whether or how much to cut back its stimulus programs. Steve Leisman spells out the stakes.
With the departure of Larry Summers from the race to be the next Fed chairman, current Vice Chair Janet Yellen has emerged as the frontrunner. In a survey on Monday by CNBC of leading Wall Street economists, strategists, and money managers, 88% now expect President Obama to nominate Yellen to succeed the outgoing Fed chairman, Ben Bernanke. For markets, the departure of Summers was good news. Surveys showed Wall Street preferred Yellen 5-1 over Summers. In part, Summers was seen as being less comfortable with the Fed's current easy monetary policy compared with Yellen. There was also just uncertainty surrounding someone like Summers coming in and taking over who has not been part of the current board and its policies. CNBC asked respondents to grade Summers, Yellen, and Fed Chair Bernanke on 10 qualifications for the top job at the nation's central bank. In the overall score, Summers finished last. Yellen graded higher than Summers in 8 of 10 categories, including political and communication skills, monetary policy expertise, respect from other financial officials around the world, and ability to manage a financial crisis, along with banking regulatory expertise. There was some suggestion from the White House today that President Obama could move in the next couple of weeks to appoint Bernanke's successor. That would remove a significant cloud of uncertainty for markets, especially if the nominee is Yellen, who was well known by Wall Street, expected to continue Bernanke's policies, and is seen as being easy to confirm in a fractious Senate. For Nightly Business Report, I'm Steve Leisman.
Well, the Fed's next move on its stimulus plans and the selection for the next chairman of the Federal Reserve aren't the only fiscal worries hanging over President Obama's head right now. There's the issue over how to fund the U.S. government and the battle that's brewing over raising the nation's debt ceiling. John Harwood joins us now with more on what's on the president's agenda right now. John, does the Summers exit throw a bit of a wrench into the rest of the president's plans or not?
I don't think so. It'll probably remove a heavy lift politically that the administration was looking at to deal with Democratic opposition to Larry Summers and Republican opposition to Summers, as there is Republican opposition to just about anything the president wants to do. So in that respect, a smooth confirmation for Janet Yellen, in addition to fueling more confidence in the stock market, as we saw today, will probably make it easier to focus on extending government funding and raising the debt limit. Those problems are going to be hard enough as it is.
You know, John, Mr. Summers said he was withdrawing because he feared that his confirmation hearings, if he were to be appointed, would be acrimonious. But how acrimonious are the proceedings going to be with respect to those budget resolutions and to the debt ceiling? They're not going to be exactly friendly, are they?
extremely acrimonious. This is a very difficult problem. We saw last week Republican leaders in the House floated a solution to extend government funding because they don't want a government shutdown. They believe it would backfire in the Republican Party. But conservatives in the Republican House caucus submarined that proposal because they didn't like it. They didn't think it was aggressive enough in going after Obamacare. The same dynamic is going to play out on the debt limit because Republicans have very ambitious demands for spending cuts, for reforms to entitlement programs, to changes in Obamacare that the president clearly, on current terms, is not willing to meet.
John, today the president gave a news briefing and he basically threw down the gauntlet and said to Republicans, listen, your job is to get this done. Let's not let the country default. Let's not get into this impasse over the budget, over the stalemate. But how effective do you think those words are going to be?
Very difficult to know. The administration is calculating that Republican leaders' desire to avoid a shutdown or debt crisis is so strong that they are going to simply force their members to accept a solution, whether it's something that Republican members vote for even though they don't like it, or that they allow Democrats to vote for and some Republicans to get a majority. It is simply not clear how that's going to happen. Very tough box that both Senate Republican leader Mitch McConnell and House Speaker John Boehner and leader Eric Cantor are in.
All right, John Harwood on the White House lawn, thanks very much. Well, joining us now to talk more about the Fed, the markets, and the president's agenda and what it all means for you is David Kelly. He's chief global strategist at J.P. Morgan Funds. So, David, why did the market see as such a positive the withdrawal of Larry Summers as a possible Fed chief?
Well, it's all about uncertainty. The stock market hates uncertainty, and there were two forms of uncertainty in the Summers nomination. First of all, he was quite right. It would have been a drawn-out confirmation battle, and it might well have got stalled in committee. So if you remove that, that removes some uncertainty. And also, even though Larry Summers is actually better known than Janet Yellen, Janet Yellen's views on monetary policy are extremely clear. They're very well laid out. We know exactly what we get if we have a Janet Yellen succession to Ben Bernanke. So removing uncertainty about those two issues, I think, is really what's behind the market move today.
And it was a strong market move, as we said. We finished off the highs. But, David, how long do you think that kind of performance can last, given the fact that we've had some mixed economic data lately?
Well, there's a difference between strengthening and tightening, and I think it's very important to understand this about the economy. Overall, this is not a very strong economy, but the labour market is tightening. That's absolutely clear. And so, I think the economy doesn't look as if it's growing very fast, but it's growing fast enough to push the unemployment rate down. And I think that does mean that we will gradually see a removal of Fed easing, of QE, and also, higher interest rates. And I think the economy keeps on growing. So I think the market will move up, but it could get a lot bumpier. I know John Harwood was talking about the budget battles we've got ahead of us, and I think that it could be a little bumpy over the next few months, but generally the direction I still think is up.
Do you expect to hear the Federal Reserve on Wednesday, when Mr. Bernanke has his press conference, say that they're going to ratchet back the bond buying? And if so, by how much per month? And what effect, if any, do you think it's going to have on the markets, or have the markets already discounted it?
I think they will, and I think the market might be a little disappointed by that. Certainly foreign markets may think that the withdrawal of Summers' nomination somehow means some sort of tilt away from this tapering. But the Federal Reserve has to get rid of this program. The economy is improving. Over the next 9 months, we expect them to phase it out. Maybe it's $10 billion of less purchases going forward. Maybe that's what they announced this Wednesday. But either way, over the next nine months, they're going to go from $85 billion of purchases to basically zero. And that, I think, will have a significant impact in pushing long-term interest rates up even further than they've already moved up.
That was going to be my next question. You have ESP, David. How much further do you think interest rates will move near term if indeed the Fed moves as you laid out?
Well, I think over the next year, as we remove this program, and as individual investors also rotate a little bit away from fixed income, I think you could see 10-year Treasury yields move up to 3.5%, maybe even a 3.5% to 4% range. I don't think they'll go over 4%. I think the Federal Reserve will make it clear that they don't want to see rates move that high, and they could, halt this tapering of bond purchases if rates do move too high. So I think, moving from close to 3% to somewhere in the 3.5%, maybe 3.5% to 4% range over the next years. That's what we pretty much expect.
David, I don't mean to push you too hard here, but what is your favorite global stock market right now for the next year?
Well, you got to look at it in terms of gains and also volatility. I think the U.S. stock market should be relatively steady at its increase. Overall, I think European stock markets, though, have got the most room to make up here. Europe has been very depressed. There are signs that Europe is turning the corner here. And if you reduce global risks, if Europe does begin to turn the corner, it's usually those markets which have been beaten down a lot, where there's a lot of pessimism. That's usually where you get the biggest gains. So it could be a lot more volatile overseas, but I think the biggest gains probably will come in overseas markets.
David, I knew I could count on you. David Kelly, always great to see you. Chief Global Strategist at J.P. Morgan Funds.
J.P. Morgan may be close to paying an astonishing $800 million in fines to several financial regulators. The nation's biggest bank is reportedly nearing a settlement with the Federal Reserve, the SEC, and the Office of the Comptroller of the Currency over charges of shoddy supervision related to the so-called London whale fiasco and its $6 billion in trading losses last year.
Well, some other big banks, Sue, have reported better news today. Goldman Sachs, Bank of America, Citigroup all passed their mid-year stress tests, proving to the Federal Reserve that they have enough capital in reserve to withstand another severe economic downturn. All three of those bank stocks finished the day higher.
Well, Ty, we had another technology glitch which impacted trading on 4 major exchanges for a while today. This time, though, it was stock options exchanges that were forced to halt trading for about 20 minutes this afternoon following a breakdown in the data feed that supplies options price quotes to traders.
Far from Wall Street, just 3 miles from the White House, in fact, at least one gunman opened fire inside the Washington Navy Yard, a heavily secured military installation, leaving at least 13 dead, including the shooter. Eamon Javers joins us now from Washington with the latest on a mass murder so close to the White House and Capitol. Eamon?
Hey guys, well, what we're seeing right now is a situation where we know that there are 13 dead here at the Washington Navy Yard, including the shooter, and we're learning a little bit more information now about the man who committed this horrendous act at about 8:20 this morning. His name is Aaron Alexis. He's 34 years old, and there's a previous incident on his record that might have raised some scrutiny if people had paid attention to it at the time he got his clearance to work as a Defense Department or a military contractor in this facility. He was arrested September 4th of 2010 by the Fort Worth police. Fort Worth police in Fort Worth, Texas. He was arrested for recklessly discharging a firearm within the limits of a municipality. That's considered a Class A misdemeanor. It was determined there that he was cleaning his gun in that instance. So we had folks on lockdown here all day today, and what you can see behind me is more police officers escorting out folks from the base as they're being released. They're being released in buses, so we're having large groups of people bust out with a police escort. They're being moved to an off-site position. Some of those people will be witnesses, of course, to today's atrocity, and they'll be interviewed by authorities to try to gather more information. But this facility was on lockdown today. The United States Senate was on lockdown today. Now we're seeing the security presence here lighten up a little bit, but it is still pretty intense, and they still describe this as an active scene. Guys, back to you.
Eamon Javers in Washington. Eamon, thank you very much. Still ahead, the U.S. and Russia reach a deal to eliminate Syria's chemical weapons as the U.S. confirms the use of sarin gas in the massacre last month. But getting rid of chemical weapons may be a lot easier said than done. First, how the international markets closed today.
We begin tonight's market focus with a $1.3 billion deal. Packaging Corporation of America is buying the packaging and paper products company Boise. The deal expands Packaging Corp's containerboard business and will boost its presence in the Pacific Northwest. Shares of Boise up 26% to $12.56. Packaging Corporation of America up 10% to $60.43. The deal also giving other containerboard makers a boost, including Rock 10 and Capstone Paper and Packaging. Well, a cash-generating juggernaut, that is how Stern AG characterizes Boeing over the next several years, boosting its price target on the stock to $164 a share. The investment bank says increased production of the 787 should give it a considerable boost to free cash flow, and separately, Boeing is reportedly close to sealing a South Korean fighter jet deal worth almost $8 billion. Boeing hit an all-time high today, up almost 4%, 115.67 the close, making it the best-performing stock on the Dow.
Allegheny Technologies, which is a specialty metals producer, agreeing to sell its tungsten materials business to Kennametal for more than $600 million. Kennametal says that sale will help bolster its sales to the aerospace and energy markets. Allegheny, the best-performing stock on the S&P today, gained 8% to $30.95. Kennametal rose just a fraction to finish at $46.39. And late today, Outer Wall, which recently changed its name from Coinstar, slashed its earnings guidance for the current quarter and the full year. The kiosk operator said recent Redbox rentals didn't meet expectations and that promotions also hurt its bottom line. The stock fell 2% in the regular session to $55.97, but then dropped sharply in after-hours trading.
The United Nations says there is, quote, clear and convincing evidence that chemical weapons were used in an attack that killed hundreds of Syrians, including many children, last month. This is the first official confirmation by scientific experts that the nerve agent sarin gas was used in Syria's civil war. But the UN doesn't specify who used them. A top French diplomat, however, said that the evidence, quote, leaves no doubt that the Syrian government was responsible. Ban Ki-moon, Secretary General of the United Nations, stressed the importance of the deal brokered by the U.S. and Russia over the weekend to secure those weapons and ultimately destroy them.
It is the most significant confirmed use of chemical weapons against civilians since Saddam Hussein used them in Halabja in 1988. The international community has a responsibility to ensure that chemical weapons never re-emerge as an instrument of warfare.
The international group that will oversee the destruction of Syria's chemical weapons stockpile says the work will begin within days. But if the past is any guide, that job could take years to complete. And as Scott Cohn reports, no country knows that better than the United States.
These giant canisters of the nerve agent VX were part of the deadliest chemical arsenal on Earth, much of it manufactured and stored at this depot in western Indiana. When we visited the site in 1997, we had to wear gas masks and carry an injection kit just in case. A single drop could kill an adult in a matter of minutes. That year, the U.S. had just agreed to destroy its entire stockpile.
We don't need it anymore. We don't want it anymore.
Today, the VX is gone, and the county is turning the site into an industrial park, including the bunkers where the VX was stored. But getting here has literally taken decades.
By the examples that we set today, we hope to contribute to an atmosphere of peace and understanding between all nations.
President Nixon was the first to renounce U.S. chemical weapons in 1969. 44 years and $40 billion later, the U.S. still hasn't destroyed all of its stockpile. 7 sites, including Indiana, are shut down, but 2 remain, containing 3,000 tons of mustard gas, sarin, and VX. The U.S. estimates it will take another 10 years to complete the job, 16 years after the original deadline.
What took so long? The chemicals themselves are difficult to neutralize, and because they're dangerous to transport, special plants had to be built at each of the U.S. sites.
In Syria, the agreement calls for destroying or removing the weapons in less than a year and doing it in the middle of a civil war.
You're probably talking about 500 to 1,000 or so people that would be required to support that operation. And they've got to get to the right place.
At about 1,000 tons, the Syrian arsenal is much smaller than even what's left of the U.S. stash. But experts fear Syria still has the ingredients it needs to make more chemical weapons once its existing arsenal is gone. For Nightly Business Report, I'm Scott Cohn.
Coming up, Dick Fuld, Angelo Mazzillo, Jimmy Kane, Aaron Callahan, Chuck Prince, some of the biggest players in the financial crisis. 5 years later, we look at where they are now. First, the stocks that have gained the most and lost the most since the fall of Lehman Brothers 5 years ago.
Chrysler may be going public. The CEO of Italy's Fiat, the majority owner of Chrysler Motors, told the Financial Times that the U.S. automaker is ready to file paperwork as soon as this week to begin selling stock to the public once again. There's a bit of a holdup, though. Talks between Fiat and a United Auto Workers Healthcare Trust, which owns more than 41% of Chrysler, are at an impasse over how much that stake is worth.
Well, you may recall that Chrysler was one of several big companies bailed out by the government during the depths of the financial crisis. Today, President Obama marked the 5th anniversary of the collapse of Lehman Brothers and the apex of the crisis by touting how much safer the U.S. economy is right now. The president says his administration has laid a, quote, new foundation for a stronger economy, but gave much of the credit for the recovery to ordinary Americans.
All of this happened because ultimately of the resilience and the grit of the American people. And we should be proud of that. And on this 5-year anniversary, we should take note of how far we've come from where we were 5 years ago.
Well, one of the biggest names in banking during the outbreak of the financial crisis is speaking out about the reforms in the banking system. Bob Diamond, the former chief executive at Barclays Bank, is calling for more international coordination between regulators to make progress on so-called too big to fail laws. Diamond says banks took on way too much risk in the years leading up to the financial crisis and that new regulations have helped reduce some of that risk.
Diamond was one of the top bankers at the center of the financial crisis 5 years ago, but there are, of course, dozens of others, some of whom are still in the same jobs they held back then. Andrew Ross Sorkin, author of the definitive History Too Big to Fail, reports on where some of the other key players are now.
Dick Fuld was a star on Wall Street, the longest-running CEO of any firm. In 2007, he mounted a vicious campaign against short sellers that he said were trying to put Lehman out of business.
What I really want to do is I want to reach in, rip out their heart, and eat it before they die.
5 years after Lehman's collapse, Fuld is chastened. He has a small consulting firm in Manhattan, no high-profile clients, or at least none that are saying so. Of the clients he does have, one warned his tarnished reputation could potentially be damaging. Fuld has spent much of the past 5 years trying to avoid criminal and civil charges. He ran up legal bills into the millions of dollars, much of it paid for by the Lehman estate. The DOJ and SEC dropped their investigations after they concluded they didn't have enough evidence against him. While he rode his Lehman stock all the way down from $1 billion to $56,000, he's not exactly poor. He still has his Greenwich mansion worth over $8 million, and he sold a Park Avenue apartment and some art for over $46 million. But he has told friends and others that he is still consumed thinking about Lehman Brothers. Since stepping down as Bear Stearns' CEO in January of 2008, Jimmy Cain has stayed out of the banking business, focusing instead on the contract bridge circuit, where he is currently ranked number 23 in the world. In addition to his $25 million apartment at the Plaza Hotel in Manhattan, Cain owns a home on the Jersey Shore and a condo in Boca Raton. Erin Callan, a rising star at Lehman Brothers and Wall Street's first female CFO. 3 months before Lehman went bankrupt, Callan told CNBC the firm was headed in the right direction.
We are in a great spot now with this capital behind us, with wind in our sails.
After she left Lehman in June 2008, she did a brief stint at Credit Suisse before leaving the business in New York altogether. She declined to do press until the recent Lean In debate prompted her to write an op-ed in the New York Times on the work-life balance debate. In 2007, Countrywide CEO Angelo Mazzillo adamantly told CNBC that his company wasn't going anywhere.
There is no more chance for bankruptcy today for Countrywide than it was 6 months ago, a year ago, 2 years ago, and when the stock was $45 a share. We were a very solid company.
3 years later, with Countrywide having been purchased by Bank of America, Mazzillo paid out over $67 million to settle fraud and insider trading charges filed against him by the SEC. Banned from serving at any publicly traded company, he's been laying low since then. Former CEO Chuck Prince resigned from Citigroup in 2007, and in 2010 he seemed pretty contrite about his role in the Wall Street crisis.
I'm sorry that our management team, starting with me, like so many others, could not see the unprecedented market collapse that lay before us.
Prince currently sits on the boards of Xerox and Johnson & Johnson. He's also for hire on the speaking circuit, represented by the same firm that represents Tim Geithner, Larry Summers, and the Clintons.
For Nightly Business Report, I'm Andrew Ross Sorkin.
What's interesting is we see some of those folks who are no longer in the business, but you look at Jamie Dimon, still in the same job, Mr. Blankfein still in the same job, and several others who survived it for various reasons.
It's amazing that it was 5 years ago. It feels like it was just yesterday to me.
So vivid.
It really does. So vivid. You're right. Well, let's end on a high note, shall we? Finally, tonight, some familiar names topping Forbes magazine's list of the richest Americans. Tyler and I are not on it. Tied for fourth place, brothers Charles and David Koch, co-owners of Koch Industries, worth $36 billion each. In third place, Oracle co-founder Larry Ellison with $41 billion. Warren Buffett, the head of Berkshire Hathaway, takes second place with more than $58 billion. And at the top of the list for the 20th year in a row, Microsoft founder and chairman Bill Gates. He is worth an astonishing $72 billion.
Consistency right there.
Execution, right? Yeah. We're never going to get there, but that's okay. That's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for watching.
And I'm Tyler Mathisen. Thanks from me as well. Have a great evening, everybody. We'll hope to see you back here tomorrow night.
Nightly Business Report has been brought to you by
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Tyler Mathisen with a Nightly Business Report news brief. Stocks rallied after former Treasury Secretary Larry Summers dropped out of the race to be the next chairman of the Federal Reserve. With traders believing that means the Fed's easy money policies will continue, the Dow soared despite concerns about a mass shooting in Washington, D.C. The Dow shot up 118 points, the S&P 500 was up 9, but NASDAQ ended down 4 points, hurt by shares of Apple, which declined 3% on news that China Telecom was cutting back on subsidies for the iPhone. J.P. Morgan is close to paying $800 million in fines to regulators for shoddy oversight that led to billions in trading losses. And Bill Gates tops Forbes magazine's list of the richest Americans for the 20th straight year. He's worth $72 billion. And tune in to Nightly Business Report here on your public television station.